Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting Asian Session Live Market Analysis for this particular week, starting from 25th of February, ending by 1st of March. So this is the last week of this month of February, and the 1st of March also falls in this particular week. So whenever you come across the month gets over and the new month starts in a particular week, the market is known to make big volatile moves. Already they have started making the big volatile moves on the downside in the case of Euro and GBP and recovered quickly, and that indicates that they wanted to just make an extended downward stop and accumulate all the stops and before making a quick rise in this particular week. Now I'll explain to you the algorithm based statistically derived forecast, and it will not be in the form of numbers, but it will be in the form of the expected market moves, because the expected market moves are more important as the forecast rather than the levels, because once you statistically derive the levels, then the two possibilities will come: either euro can go upside up to this level or down on up to this level. But when it comes to down the support level, then immediately we will also find statistically that there could be an upward move or a downward move. So in such a scenario, you find in the conventional statistical analysis always the two possibilities are given, and that does not give the trading decision, or that only induces to take our own decisions. Instead, my algorithm says that what could be the possible moves for this particular session and also for the day on a daily basis. So based on that, we will be able to decide, okay, the market is likely to go up or come down. We will be able to read the market moves or the different type of moves the players do during that particular day and fine tune our entry. For that, we use the initial lows and the highs set around 3:30 GMT and try to find out what possible trade we can do it. And we have to get rid of the market fear. Only then we will be able to enter into that of the market. Otherwise, we will expect the market to calm down and later on we try to enter, or sometime we may call it as a falling knife. We are afraid of catching it and things like that. But after the reverse, if we try to take the position, then they may just make downward stop again to discourage taking long position and induce traders to comfortably do sell and buy trades. Then later on, the players try to trap them in a big way on the upside as well. So the players are known to trap the traders on the downside and the upside after creating the market sentiment. So we should not go with it of the market sentiment created, because those sentiments are short-lived and suddenly they can give an anti-sentiment and try to reverse the market, but we may find it extremely difficult to change our market sentiment. That is human mindset or the weakness, and so that the players try to make use of and try to make quick moves in the market and induce the traders to commit wrongly. So in order to limit the risk, even though we try to read the market carefully, we use the trading strategy. So the trading strategy, basically, we follow the forecast and the market reading and decide on the entry and the exit during the quick moves of the market. During start of the session and end of the session, they are known to make quick moves in the case of majors, and during mid sessions they are expected to make quick moves in the case of the crosses. So based on that, if you are interested in trading majors, we try to focus during the early session and also the late session. Mid session we don't try to commit positions in majors, but mid sessions, if you find good moves are happening or quick moves are happening, in the case of crosses, we try to enter and exit. So the entry is near that low set for the day in any currency pair for that matter, and still our entry might be wrong. They may do stop-ins and things like that because it is a humanly calculated method. Still, there is an element of error associated with that. So we always try to use the trading strategy of keeping the entry stop or the hedge order. If the hedging facility is not available, we use the stop, or we try to take the hedging in a corresponding pair where you find similar moves are happening. So that way, say for example, when you are taking the buy position in euro, normally we try to take sell position in GBP. But what happened? GBP already they had dropped it. They are not showing corresponding net changes. So we may find that when euro is making a drop, GBP might gain. So in both the positions, when you try to use GBP as a hedging, might make loss. So in such a scenario, what we do is, when we are trying to take a buy position in euro in the absence of hedging, we try to take a corresponding cross which is making similar moves. So in where the euro is the numerator. So already euro yen has gained about 100 pips. So euro has gained nominally about 20, nominally about 2 pips. So here in the case of crosses, euro GBP 31 pips, euro CH of 21 pips, and wherever you come across euro as the numerator, euro CAD for example 49 pips, euro Australian dollar 50 pips. So you find that all the euro crosses are making big moves excepting euro because of the other currencies showing the contrarian move. So we don't find any other euro cross excepting euro New Zealand where you find about 18 pips positive net change. In such a scenario, 30 pips below that of the current market level, we can keep the hedge order to limit the risk, so that when euro reverses, that corresponding currency will also reverse, which is making a nominal positive net change, so that we will be hedged and our equity will not erode, or it will not show another wrong trade. So that way we have to decide on the hedge in the same currency pair, or decide on the stop if the hedging is not available, so that we will accept when the loss is small, or we try to hedge using a cross which is showing similar net changes with regard to the currency wherein we wanted to take the buy position or a sell position. Then afterwards, if the position is not hedged, we try to keep stop at entry once the position makes profit and remove the hedge order. Thereby we use the hedging instead of stop, and then once the position start making profit, we trail the stop in a profit making position. In the event if it is hedged, then we try to see whether the hedging is making profit. If the hedging is making profit, we keep stop at entry in the hedging. And if the hedging is making profit for 2 hours consistently, that means they are making intentional move on the downside. So immediately we close the sell buy position in euro and try to book profit on the downside move of the respective hedge. Thereby we will be able to earn net profit. That is one method. Otherwise we can simply keep the buy position in euro and let them drop further down, and once they stop cutting the new low for more than 2 hours, we try to close the hedge with the profit and keep another hedging order 30 pips below, and once the market reverse and go up, we try to take a buy if equity permits. Otherwise simply wait and try to close the buy position with a nominal profit, or with break at even, or with a higher profit using a trailing stop. So if you take very less position, then that sort of trading possibilities happen in the market. Otherwise if you try to take too many positions, then we may come across that over trading is inhibiting us to do any sort of trading strategy. And that is what you come across. Most of the traders try to accumulate position in 2-3 positions, averaging about 20-30 pips drop, and later on when they make a big drop of this nature, they are not in a position to avoid margin call. So the players are here to do the stop-ins and the margin call. They are the only methods by which they can make the traders to incur absolute loss. Otherwise, you may see the drawdown, but still you would not have lost the money as such. But if the stop is hit, you have lost the money. And similarly, if they attract margin call, then you lose your money. So they are the two methods by which the players can earn money, and that becomes their money. Your money becomes their money as in absolute terms. So they have to necessarily try this, especially during that of the month end time. They make such big moves. Already during the Japanese session, you can see that the pairs are making about 100 pip or 100 plus pips, and that indicates that the players are here to make massive profit by making whipsaw moves during that of the month end time. So now let me explain to you the expected market moves for this particular week, 25th February to 1st March. That is today, 25th. Swing and firm up moves are expected during Japanese session, followed by that rise, quick rise during that of the European session, and then late European session they are expected to make a slide again, make a drop and confuse the traders or make the traders to lose patience by doing such moves, so that the traders feel that okay, they have done the stop and they will be trying to rise, so let me take a buy, and later on they make a rise but they fail to book profit, because during this last week of the month normally we can only do the swing trades. If we try to do position trade, they will discourage by making one more drop, then we may stop out at entry, and later on they may try to rise. So during the last week of the month and the first week of the month, try to focus on the swing trades, and whenever you have taken a buy position at the extreme lower level, then there is a possibility to do the swing trade. Still, you focus on swing trade and try to book profit, and later on from second week of the month you try to take the position, then you will be able to really make good profit on the buy side. Then tomorrow, 26th February, swing during that of the Japanese session, they are expected to make subdued moves, and European session a small dip starting, they may make a small dip and a quick rise during that of the late European session, and US session again they are expected to make volatile moves, up and down moves, and later on they may rise. And then Wednesday midweek they are expected to make a dip during start of the Japanese session and firm up, and then volatile moves during that of the European session, and a quick rise moves during that of the US session. From Wednesday onwards they are expected to make the visible gaining moves in the market, and they may continue till Friday. Then 28th, that is month end time, Thursday, swing and slide move. From that of the raised level they may make a small swing and slide during Japanese session, followed by swing and quick rise during that of the European and US session. Then 1st of March, Friday, it's a weekend and the new month beginning time, swing during Japanese session and swing and rise during that of the European, and quick drop and rise during that of the US session they are expected to make, because month beginning they are handling the derivative market. So month end as well as the month beginning time they will try to handle the options and the futures. For that, in order they just make a writing put option at the lower level and the call option at a higher level, then later on make a very quick rise and book profit in all their put options, and later on they try to rise the market. So this is what they do every month. So we need to understand month end, that is why they make big moves in the market, and we have to be carefully handling your position or avoid taking positions during month end time. If the equity is very small and you do not want to use stop to limit the risk or hedge to limit the risk, then avoid taking positions during the month end time and simply make observations of the market. Whenever there is a quick move happens, you try to enter, and very next moment you will come across the opposite move, book profit and just keep away from the market. That sort of trade, if you do as an opportunity trader, you will be able to gather profit during this particular time frame. The next week, 4th to 8th, swing and quick rise moves may be seen with more upward bias, and it will be visible upward move. At the time, the denominator currencies are expected to hold the gains and they may not drop. Now coming to that of the market reading, we note down the initial low and the high in all the 6 pairs, 4 majors and 2 commodity pairs around 3:30 GMT, and try to find the type of moves they are doing it during the session following the time frame, because up to 7:30 is the Japanese session. We try to find out what could be the possible moves, and so for your reference I have noted down the initial lows and the highs, and now let us compare the initial lows and the highs which are noted down around 3:30 GMT, and now compare it to that of the current level. Now, the case of euro, the initial low was 31.47. It is not breached, and 32.45 is also not breached. But they made a big move, so almost closer to 98 pips. They had done it, and now currently 4 pips positive from that of the Friday close. So they just made a one quick downward move and come up, and they are holding in the middle level. Then in the case of yen, they have made about 71 pips gain, similar to that of last week. Last week what they had done, they opened very high around 94 level, and from there they came down to 92.87 and things like that, and started accumulating more position around 93, and they have opened with an upward gap opening. 93.37 was the close, and from there they had gained 93.97 straight in one go by doing the circular trades, and gained up to 94.45 and induced the short sellers to do the short covering, and now they are holding around 94. And if you think that they will make similar moves similar to that of last week, then we may find that they are just showing for the higher levels and also gain the levels in the case of euro and GBP, and try to handle the yen crosses. So in the case of GBP, 1.5074 was the low and 1.5137 was the high, and they made the big moves again here. Below that of 1.51, they made a quick downward stop and then gained and come closer to that of the high. Even though it shows 48 pips negative net change, it has come closer to that of the high. So they opened lower and straight gone down quickly in few minutes, reversed it and come closer to that of the high, but it shows 48 pips negative net change. That means current level is 48 pips lower than that of Friday close level, and Friday you would have noticed in the case of GBP they gained quickly up to that of 1.53 and induced the short sellers to do the short covering and hammered it towards close to 1.5178, and from there they just made one more drop of 100 pips from that of the close level and then come up. So this is the way they make the massacre in the market. So whatever be the type of analysis we try to do and take positions, and they could simply make whips or moves and just make our trades to make loss, and we have to understand the trading strategy alone can protect us from this sort of moves during that of the month and time. In the case of USD CHF, 92.92 was the low and 93.18 was the high. They are just making consolidation, but they are making a contrarian move. Positive net change in the case of euro and positive net change in the case of CHF. So when both are showing positive net change, it is a contrarian move on the upside. So euro CHF, they are in the positive net change, 18 pips. So after making a downward move, they are just consolidating here, and they are slowly gaining the levels, and again quickly they are expected to gain the levels in the case of euro CHF. And Euro GBP, they have just made the last run to 87 area. After coming down to 86, again they had taken it to 87.66 and then dropped. So this is how they make the upward stop and drop it. And later on you will find during the course of the day and tomorrow they will hold here and just try to sell the long positions, and later on they are expected to make the slide in the case of Euro GBP. And they are finding a lot of traders are committing positions in Euro GBP because of the extreme level, and they are trying to make very good profit, or the pip value is very high in the case of Euro GBP, so they are really focusing on that. Then in the case of Canadian dollar, so consistently they are gaining the levels, and 1.0220 was the initial low and 1.0240 was the initial high, and they gained about 35 pips from that Friday close. In the case of USDN and in the case of USD CAD, they made a gap opening on the upside and gained the level, so that you will find that when Euro and GBP are gaining, they may simply hold or make a little bit of corrections. So you cannot do either way trades. That's what I was telling you, that whenever they are making a downward stop, and you try to take a buy and quickly book profit when they are doing an upward stop in the case of Canadian dollar. Similarly in the case of USDN also, when they are making a downward stop, and try to buy and book profit comfortably during that of the upward move. And so sell and buy trade will be very, very risky in these currencies making one-sided gains. Then Australian dollar, 1.0263 was the initial low and 1.0303 is the high, and they are holding in the middle level. So in none of the currencies they have breached the high or the low, but the spread already they made around 3:30 GMT between the initial low and the high. So whatever the pending stops, they just accumulate by hitting them, and now they are expected to hold and induce the traders to sell. Looking at the levels, the traders are expected to go for that of the sell and buy trade because the supports turn resistance. So invariably the players will be buying them and try to trap on the sell side. Now, with regard to the expected market moves for today, swing and firm up moves are expected during Japanese session up to 7:30 GMT, and between 7:38 GMT is the cap time. Then afterwards 8 to 14 GMT is the European session. Early European session, they are expected to make a quick rise and then slowly slide during that of the late European session, and then reverse the market during that of the US session by making swing and quick rise moves. So volatile moves are part of the game during last week of the month, so you have to be very careful using the stop or the hedging order to limit the risk. Don't try to trade without a stop, then it may be detrimental. They may suddenly attract margin call, and the platforms are the one, they will not show any mercy. And even though there is a pip shortage of 2-3 pips, still they will try to hold all your positions and close them, and telling that the spread during that of the margin call may be 10 pips, 20 pips and things like that, and simply they will close all the position and give only the meager equity. So be careful with that, and later on there is no point in blaming anybody, and you have to do the manage your positions. Nobody else can come and manage. It is something like, suppose you suddenly developed fever or some infections, and nobody else can take medicines. You can only take medicines and get cured with that. So in a similar way, when you have overtraded, taken more positions, and when you find that the market is not in your favor, try to close the less loss making positions to start with, so that your equity will improve and also the number of positions you are holding will be less. That way, when they try to make big moves also, margin call will not be attracted. My humble suggestion will be, try to expose only 1 or 2% of your equity, the positions, so that you can do it calmly, the trades. Even though you may think that the earning is very less, you may earn only $50 and $100 and things like that in a day for all the efforts we are doing. But if you do only 1 or 2 mini lots, when you have equity of 5,000 to 10,000, you will find that the players cannot shake you. Gradually the market fear will go, and also you will make quick observations of the market, and all the quick moves you would have observed without taking positions, and later on you will find that you become a very comfortable trader. By making observation of the market without the position, it gives enormous insight about the market. Simply watch the live market code page, you will get that insight. But instead, if you take, say for example, a position in Euro CHF, and then if you are asked to see the live market code page, you will only focus on Euro CHF. You will not look into anything else. Then you become biased. You only see that no, Euro CHF is not at all making big moves, whereas the others are making big moves, and you think that now they are making USD gaining move in the market, so they are expected to make the USD gaining move in the case of USD CHF, but they may simply hold and test your patience. So if you commit more positions, then you may find that the market fear is triggered and you may close the position. Later on you will find that USD CHF has gone up. So you require enormous patience. I always say that the market rewards patience and not the impulsiveness. So let me take up the questions which are asked here and try to answer to those questions. Please ask your questions in the chat window. I don't know whether anybody has asked in the question answers window. No, nobody. Kindly ask in chat window so that I will answer to those questions. Then JP Nambia. We expected the GBP/USD to rise since last week. Yes, sir. But it is sliding down for the last 2 weeks. Is this an intentional move? It is more than that of the intentional move. They are handling Euro GBP and also the GBP crosses, and that is why they are just making less rise and more drop. And also in the case of GBP, they made the slide in order to create the market sentiment. And so on GBP on Friday they gained it quickly, and from 1.53 they dropped it to 1.51 level in one go. So you can understand it is mainly to create the market sentiment and induce the traders to do sell and buy trade, and later on they wanted to buy at the lowest level. So this is one of the buy strategy of the players. So it is something like the cap seller and the monkeys. So you know the story when the cap seller was going around keeping caps in the basket, and he was taking rest under the shadow of the tree, and when he was wearing the cap, and the monkeys thought the caps are meant for wearing, so they all took the caps and started wearing it, and the cap seller found that the caps are missing in his basket. So immediately what he did as a trick, he threw the cap on the floor. Then all the monkeys thought that we have to throw the caps on the floor. So they all threw the caps, and he silently collected all the caps and kept it in his basket and walked away. So it is the herd mentality. So when the players induce us to do the sell and buy trade, and if you go in for such sell and buy trade as a technical trade, then it is something like the herd mentality. And when the last bullish person, a strong bullish person, try to sell, the market reverses. That is what happens in the market. Okay. In Nambia, when you say hedge, or we saying hedge in the same currency, if the hedging facility in the same currency is available, then you can hedge it in the same currency. If it is not available in the trading platform, you can hedge it with a currency pair which is making similar net changes, either a major or a cross. And it should be where euro should be the numerator. If you are taking a buy position in euro, you look into the of the cross where euro is the numerator and try to keep 30 pips below the market, the hedge order to limit the risk. So that when the market comes down, euro being the numerator, that pair will also come down, so your hedging will be really protecting your equity. See, the basic idea of using hedging is not to add another position, just to limit the risk with regard to your equity. And in that, we try to trade in order to earn on either way moves of the market. There comes our strategy. Then Cindy, I started trading last December, hoping to make plenty pips this week. Okay, see, I always say that you can set your goal, and an intelligent person, you will set the goal, okay, I'll be making plenty of pips, fine, but he has to focus on the steps in the ladder. So first step, how do I get rid of the market fear? Then how do I fine tune my entry during quick moves in the market? That way you will be focusing more on the process, and once you focus on the process, you will find without your knowledge, even in a shorter time frame, you would have reached your goal of earning about $10,000 or $20,000. You would have just gained it in a shorter time frame. But if you simply say that, okay, in down the line 6 months, I have to earn about 100K, you can fix it. But if you don't focus on the process, how exactly I am going to reach it? Okay, you may do that divided by the number of trading days, and each day I have to make 400 pips or $400. Fine. Still, to make $400 on a single day, you have to focus and develop a strategy. Otherwise, the destination cannot be reached. Please focus on the process of making money. That will automatically make you to become a professional trader. Then Shand, Australian dollar likely to be range bound. Yes, 1.02 to 1.06 or 5.50, or it is likely to go up along that of euro and GBP. Not along the, it is expected to rise from these levels to that of 1.0550 and things like that. And you know that Australian dollar is a currency, and it quickly gains and then later on lag behind. So that you have to keep it in mind. The first gain, you try to book profit. Subsequently, don't buy at a higher level, and they may test your patience. And always choosing the right currency during right time frame is very important, so that your profit making will be high. Always keep in mind these are tradables. No, they are all ratios, and they are not actual currencies. They are all ratios, and these ratios, if you buy, you have to exit in the market. You cannot take delivery of that. So they are all tradable instruments, and when they are tradable instrument, find which instrument will be able to give you good profit without having any sentimental attachment to that of the currency pair. Some people say that I am very well versed with it of the yen crosses. At the same time, the yen crosses are known to make very big moves. If your equity is not sufficient, then they may give about 4-5 times the profit, and in one big go against you, they can get back all the money. So you have to be aware of that, then you enter into the trade. So understand the behavior of the currency. What is the behavior of the currency? How that particular currency is handled by that of the player. We need to understand. For example, USD yen, they make one-sided rise. USD CHF, they make one-sided rise. And they make less drop and more gain moves. Less drop and more gain moves in them. USD yen and USD CAD. And also in the case of USD CHF, they make all the denominator currencies, they make less drop and more rise moves. And in the case of numerator, Euro and GBP, they make either way volatile moves. So if you are holding sell or a buy position, if you wait for a few days, you will be able to book profit. and without adding positions. And in the case of Australian dollar, they will make a range bound moves. So any level you hold it even for 10-15 days, you will be able to book profit in that. So only thing is you have to take less positions. So understand the behavior at a given time, those currency pairs, then try to trade calmly. And those of you trade without a stop, Australian dollar is a good currency. You can just hold the position calmly with a limit order to exit, and you open the platform on a daily basis. One day you will find your position is closed with limit. Then wine brown. When viewing the board, how do you know which pair will make good moves for the upcoming session? Good question. So I explained many times that a currency which is making less negative net change of the numerator, a currency which is making more positive net change of the denominator will make the first move. Now let us look into it. GBP is making 46 pips negative net change. Australian dollar is making 40 pips negative net change, but whereas Euro is making 6 pips positive net change. So of the three numerator, Euro is making positive net change. GBP and Australian dollar are making negative net change in order to handle the respective crosses, Euro GBP and Euro Australian dollar. So which currency they wanted to make first move upward? Euro. So when they make a small dip in the case of Euro during late session, because you are taking a major, and between 6 and 7:30 GMT will be the late session. 6 and 7:30 GMT will be the late session. At that time when they make a small dip, you try to take a buy around 31.85 or 86 and things like that, and try to hold it with a hedging order, because we always use the trading strategy to limit the risk. Then later on, when they make further upward move, keep stop at entry. Then you will find Euro will be the first currency to move upward, and followed by that Australian dollar, which is making lesser negative net change when compared to that of GBP. So Australian dollar is expected to make a rise. There again, since it is in the middle level, when they make a small dip around 1.0272 or 69, you try to take a buy. Then they will also make a move in this. And finally, they will make a rise in the case of GBP. If you look at it, okay, GBP is beaten out too much, so why not I take a buy position in that? They may test your patience. That is what I am trying to tell you. With the help of the net changes, you find out which currency pair they will make move first. Then similarly, with regard to the denominator currencies, now all the denominator currencies are making the positive net change. So USD-Yen is making 76 pips positive net change now. As you see that they were holding around 94.04 and they have come up to 94.1112. Okay, this is the first currency to go up. And even when Euro is showing positive net change, they will not bring USD-Yen to denominator. I mean USD-Yen to negative net change. And then afterwards, USD-CHF is making only 11 pips negative positive net change. So when Euro goes up very big, USD-CHF will start making negative net change. But whereas USD-CAD will be showing positive net change, and they will try to hold, make a small dip in the range of 20 pips, and then subsequently they are expected to gain the levels. Since the range of between the high and the low is very less, avoid taking position here unless and otherwise they make a downward or an upward stop end. So when they make a quick downward stop end, you try to take a buy. When they make a quick upward stop end, you try to take a sell. Whereas in the case of USD-Yen, try to take a buy, and also in the case of CHF, don't sell, because they may just make about 10 to 15 pips negative net change when Euro is gaining about 30-35 pips. So now we have identified the currency. Euro buy is a good strategy, and USD-Yen buy is a good strategy during dip. And in the case of GBP, you will take position later. Australian dollar, we can take a buy when they make a small dip between 6 and 7:30 GMT. CAD at the moment you avoid, and Swiss franc also at the moment you avoid. So this way you can choose the currency, and based on that you can choose the respective crosses also. Now if you want to trade in crosses, we are well versed with crosses. Now in the case of Euro yen, they are just gained about 119 pips already after making a downward move and then upward move, and now it is closer to high. Don't buy it. When they make a little bit quick downward move around 6 GMT, that will be the end of the mid session. Later on, the late session will start. At that time, when they make a dip, you try to buy. Keep 50 pips hedge order in the case of crosses, because the spread is high, and also they make very quick move because of lesser volume. So you have to be careful. And in the case of GBP yen, avoid it, because I told you GBP is not expected to make immediate rise, and it is expected to rise later on during the day. So you can take position in Euro yen. And similarly, Euro GBP, it has gained about 33 pips, and they are holding GBP in negative net change, Euro in positive net change. But if you try to take a sell position near that of the high in the case of Euro GBP, you may not see the profit today. And if at all you wanted to book profit, it might be about 10 to 15 pips. So when they make a quick upward move, next time you try to take a sell and keep stop at entry, and then they will start making a drop. After the drop, don't sell technically. Then you might find that you are trapped. So they made the drop like that to 86, 85 area, and a lot of people started selling. So they have been trapped and they are holding around 87. So after the drop, avoid selling. Similarly, after the rise, avoid buying, so that your entries will be very, very safe. John Murphy, okay. Then Biplop. Will USDN slide to fill the gap? No, they may not fill the gap all the time, and that is what people will expect by either today or tomorrow. But they are expected to make one-sided move. Any currency which has made more than 75 pips positive net change or a negative net change, it is unlikely to reverse. Then Cindy, is Australian dollar will still drop? No, further drop in the case of Australian dollar is very limited. When you say hedge, are we saying hedge in this? I already explained. Okay. Will Euro yen behave the same as USD yen? Not necessarily. It all depends. When both are showing positive net change, then the cumulative effect will be seen in the case of Euro yen. So now Euro 13 pips positive net change, GBP 84 pips positive net change, and you find it is 125 pips positive net change. So a cumulative effect will be seen whenever they are making contrarian move. Then Sundaram, if I take a buy in GBP, can I hedge with GBP yen sell? Okay. Now, as a contrarian move is happening, USD yen and the GBP rises. Okay. Now, as far as GBP yen is concerned, now GBP is showing negative net change of 41 pips, and USD yen is showing positive net change. So both are showing USD gaining move. Both are showing USD gaining move. Now coming to that of GBP yen, it is showing positive net change because USD yen has gained more, and also GBP has weakened. So when numerator is weakened and the denominator has gained in the level as a USD yen, you find it is in positive net change. And 40 to 50 pips below the current market level, we can keep the hedge order if we are taking a buy in the case of GBP, because both the currencies are showing USD gaining move. If they are showing contrarian move, then it is not a currency to be used for hedging. Hope you are able to understand, Sundaram. Okay. Are you expecting GBP/USD will go higher from here? Yes, they are likely to rise to a higher level, but they may test the patience a little bit. So you can definitely take a buy, no doubt about it, but you have to patiently wait. And it's a good level to buy. And whenever they make a quick move on the downside, we should buy. And that is how they buy. Yes, GBP is a good level to buy, and further downside is limited. Still use the hedging order to limit the risk, and once a position makes profit, keep stop at entry. And GBP will be the last one to gain after the gain in the case of Euro, USD yen and Australian dollar I explained. So you need to have the patience. If you expect a quick rise, then take position in Euro. And New Zealand dollar likely to move along with that of Australian dollar in a range bound as well. Now, as far as New Zealand dollar is concerned, which is less traded currency when compared to that of Australian dollar, and in the case of New Zealand dollar, you find 6 pips negative net change, whereas Australian dollar, it is 42 pips negative net change. So they will always maintain a difference with regard to Australian dollar and New Zealand dollar in order to handle the cross Aussie New Zealand. So you have to understand the behavior of New Zealand dollar and then try to take positions. Simply following Australian dollar, if you take position, and it may not work well. So you have to find out in a given day which is making more drop and which is making less drop. When New Zealand dollar is making less drop and Australian dollar is making more drop, you find Aussie New Zealand dollar cross. Aussie New Zealand dollar cross is making about 39 pips negative net change because Australian dollar has shown more drop and New Zealand dollar is also weakened. Both are numerator currencies, so they are weakened. So here they are near that of the low. And when they gain quickly the levels in the case of New Zealand dollar, what will happen? This will drop, make one downward stop, and at that time you try to take a buy. Then afterwards they will start rising Australian dollar. Then it will work very well. So track the numerator and the denominator whenever you are taking positions in the case of crosses. Then you will be able to really understand how they are making moves only in the case of majors in order to bring moves in the case of crosses. Then go on. GBP is the currency. They will rise, but it will take time. Probably from that of late European session, they may make big moves in the case of GBP. In RD. What is the direction of USD yen and Euro yen? It is upside, but Euro yen, it is expected to make volatile moves and rise. Whereas USD yen is expected to predominantly show one-sided rise. Avoid doing sell and buy trades. That's what I can humbly tell you. In the case of yen and yen crosses. It may look that yen crosses you can do sell and buy trade, but suddenly they will make a trap move, and especially with a gap upward opening and things like that, you may not be able to withstand. If at all you do sell and buy trade, try to close the position and within the same session or within the day, and don't give any time lag of waiting for the next day and things like that, looking into that of the chart. And players are here to trap both the long holders and the short sellers. Alternatively, you have to keep it in mind and try to trade it. So, no more questions. So, let me just wind up my webinar. So, we focus on that of the derived forecast as a guiding factor for us. And I explained to you that derived forecast for the coming days, and also we follow the market reading technique and try to identify the type of moves in sequence they are making it, and we know the sequence. They make an extended move followed by that of the intentional move. What they have made a quick downward move in the case of Euro and GBP today is an extended move for 2 hours. By 3:30 they have come back to that of the high. So that is a quick downward extended move followed by that of the intentional move. Intentional moves, low pip rise, they are expected to make during the day. And then during the session change, what they have to do, they have to make dip and induce the traders take a long position to liquidate and then later on rise, and also induce them to do the average selling and then rise. So this is the way they trap it. So we should not become fools of averaging the sell or averaging the buy without understanding what type of moves they are doing it. Then also, whatever the reading we do it, still the element of error is always there. So use the hedging to limit the risk or the stop to accept when the loss is very small and bearable, and later on you try to keep stop at entry and try to maximize the profit. Simply closing the position and telling that I have booked 30 pips profit is not a great thing. You have to maximize the profit also in the profit making position by using a trailing stop and trailing limit. Then I explained to you the expected market moves for this particular week and also the next week. So this is being recorded and you can refer to it later on also, otherwise make a brief note of it. And with regard to the initial lows and the highs, none of the currencies they have breached the initial low or the high. Again they are making, because already they have made big swings between the initial low and the high, indicating that it's the last week of the month, so they are expected to make big moves in the market. Then expected market moves, swing and firm up during that of the Japanese session, and a quick rise during European session, and a slide during late European session, and then swing and quick rise moves may be seen during that of the US session. So volatile moves are expected to happen. When they stop cutting the new high, for more than 30 minutes book profit and focus on the swing trades during this particular week. So I take this opportunity to thank FX Trade for the facilities offered to present the webinar, and you people who have come here to listen to my webinar. And if you are able to gain information and gain the insight of the market, I am very happy about it, and I am not expecting any other reward out of that. Then we'll meet again on 4th of March. I am supposed to give on Thursday a review of this particular webinar and the expected market moves, but I have some other work, so I will not be able to present it on Thursday. The next Monday I will come back March 4th and give yet another Asian session live market analysis webinar. So trade with care using risk limiting strategies during this particular time frame. Thank you one and all. See you on 4th.